Futures point to a higher open on Wall Street as European leaders prepare to gather in Brussels for the second summit in 4 days to address the debt crisis. The earnings schedule is very full once again, while macroeconomic data is light with just durable goods and September new home sales on tap for Wednesday. Asian markets paired earlier losses on speculation that China may begin easing monetary policy, mitigating uncertainty around European sovereign debt. I'm Jill Malandrino with The Street, and a special edition of the Morning Call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Stephanie Link. I'm Director of Research and Vice President of Strategy at The Street.
Perfect time to have you, Stephanie. I can't describe everything she does because she wears like a ton of different hats, but she runs a big buy-only portfolio that she actively manages. So at this point, after a big move that we've seen off these lows, it'll be perfect to have her so she can walk through how she actively manages it. But first, tell us what you do over there.
Thanks. Oh, thanks for having me. It's great to be here. Well, basically, I run the Action Alerts Plus portfolio. It's Jim Cramer's charitable trust. It's a long-only portfolio, as you mentioned. It has about 35 stock names in the portfolio. Subscribers can follow along. The uniqueness to this product is that the subscribers actually get the information before we can trade. So we send out email alerts on strategy, on stock ideas, on trades. They get to do it before we do.
So that's great. So real time, they get to see exactly what you're doing, and they get to do it before. It's not like you're buying it and then all of a sudden you upgrade it and then who knows what you're doing with it after, like most analysts or wirehouses out there.
That's right. That's right.
So at this portion, you have so many different positions in your portfolio, and you're probably feeling pretty good. Nice little move off the lows. What, 13 to 15%?
Yeah, it's been a good couple of weeks, actually, from the October 4th lows. We actually, over the summer, we actually raised a bit of cash. We had about 15% cash. So into the declines, we were actually picking away and trading around core positions. And now we're kind of letting some go when, the target prices get reached.
Right.
And again, it's trading around core positions because that's really what we do at the fund.
And it's hard probably to, once you meet your target, you always think you can get more. And we always say that as well with traders or even recently yesterday. We talked about 1250 to 1300 as a target probably 2 weeks ago at 1170. So we said this is probably a spot to take some profits. Everyone's getting too excited. We have a big event on Wednesday, but it's always hard to do that because once you're there, you think you can get so much more profits, even I'm sure in positions, but then you have to remember why you had that target there before it got there, because it made sense and that was your calculation.
Absolutely. You want to be valuation disciplined, right? I mean, we can say that stocks are really cheap right now at 12 times forward estimates relative to long-term average of about 15, 16 times. But individual stocks have their limitations, and you kind of can't get too emotional about it. And so that's why we try very hard to stay disciplined, and when the stock target is reached, we trim. We may not sell the whole position.
Right.
We may just wait for it to pull back and buy it again. Again, that's trading around core positions.
Oh, so you go from tier 1, tier 2, and tier 3, which we talk about a lot. Even as a trader, you want to hold something, but then when you see the right pattern, you get to tier 2, tier 3, so you could add cash flow to your position. You could do that on a 1 to 3 day time frame, and obviously you could do that on a monthly, quarterly, yearly time frame.
Absolutely, and particularly around earnings season, right? Since it's such a volatile time, you get opportunities to buy when stocks get oversold, and actually then to lighten up when there's euphoria.
There you go. And right now, let's take a quick look at the S&P because we came into some significant resistance yesterday. We have a very big event today. So before we talk about that event, let's talk about the chart. Here you go at the S&P. This was that low. This is that reversal. This is that outside day. I call it the red dog reversal. You guys know that. Anyway, this is the day the bears lost control. Had a big 3-day move. This is when it consolidated. This is when we saw some commitment. Then we broke this mini downtrend. This was the time to get to macro tier 2. Add to your positions. Then you had a quick move to the upper end of the range. Last Friday, we broke above it. And then yesterday, slight pullback. That's all that was. A 1.5% to 2.5% pullback, depending on the indice, after a big move up. And now, what are you expecting to come out of today?
Well, today, it's still earnings, right? I mean, you have 190 companies in the S&P reporting this week, 170 next week. So these 2 weeks are going to be kind of crazy. But I think that the shift today is going to be a little bit more towards Europe and what happens with the bailout package, and do they deliver on expectations or not?
Well, I think at this point, maybe with yesterday, with the talk that's been going on, the expectations have been lowered.
Yes.
Because I think people at this point think we can get a plan of options, not a plan of details.
Right.
So that means we're going to be in this type of trading, headline-driven, watch the action as we move forward. So what I want to show you, Stephanie, is the retracement rules that I follow, because obviously everyone's going to want to hear something different out of Europe today. Right. I'm going to want to see what the market does. So if we take a quick look at the S&P again, you will see I can go to my trusty little Fibonacci gadget, and I could draw the range. This was the low, right? That was the low at 1074. You go to the high we just came into, about 1257, and you take a look. Here's your 25% retracement. That's 1212. So from 1076 to about 1257, if we pull into this area and dip buyers come in and commitment comes in, you're going to see a lot of shorts still trapped. You're going to see a lot of people saying, oh my goodness, I have to pay up. Right. And we'll see the same type of nature of this rally that we've seen for 3 weeks.
Right. And I would just say that I think, just based on what I hear, I think that portfolio managers are not in position for a big rally. And I think we might set ourselves up for the big chase into the end of the year as portfolio managers chase for performance, because it's been a really hard year to outperform the benchmark. So we'll have to see if we do see a pullback, then do you see real, a lot of buyers come in? Again, we're looking at valuations and they're not extended. Earnings are pretty good. So, if our levels are reached, and we make levels every day of each stock of where we would buy and where we would sell, and if our levels are reached, we'll take a bite.
And I think the chase happens if we don't pull in more than the 25% retracement. Because if that's the pull-in, then they're chasing. We can even pull in a little bit more, if we really, I was on a BBC call 3 weeks ago, and it was a show. They had no clue what they wanted to do. They didn't even know if they wanted the euro. So they're all getting together, 17 nations. So if it really gets ugly today, maybe they shake the tree a little bit more. So if we don't hold that 25%, if you look at this chart, you will see that this 38.2% retracement on the chart is really 1188, which also coincides with that 1190 that held up about 2 weeks ago. So know this level, 1212, and also know 1188. And obviously there are a lot of sectors to focus on in this rally. So in our sector spotlight, I want to talk about where you see a lot of opportunity.
I see a lot of opportunity in the industrials. This group got really hit hard year to date. It's one of the worst performing sectors.
The industrials actually led the Head and Shoulders formation downward. It made new lows before, but then they've been showing a little bit more relative strength lately.
Recently, right? And I think that's because you've gotten better economic data, right? Better manufacturing data, better factory orders, ISM, PMI. Even global PMI has been a little bit better. So I think that, we've gone from the fear of a double dip recession to one of kind of slow growth, 2.5%. And I think that the industrials are pricing in a recession. So that's why I think you can be buying these stocks. But I think most importantly, there are themes in industrials. There's the auto theme. There's the truck theme. There's agriculture. There's aerospace. Those are 4 really secular growth stories that over the long term I think have legs and real defined growth over the next several years. So those are the sectors within industrials I'd like to be part of.
So give me a few names that you just started buying that you still see opportunity right now.
Yeah, so I think Eaton is one that's one of my favorites. Actually, they just reported a very strong report. And the reason I like it, they have exposure to almost all of those end markets other than ag. It's aero, truck, auto. And they have a very good management team, a good balance sheet, and really they're the leader in what they do. So I think this one is
take a look at the chart.
Yeah, I think it's very attractive.
ETN, take a quick look here. This one had a nice move off the lows. This was that Tuesday reversal, came up quick, broke this downtrend, and right now it's hovering pretty well. I think as long as it stays above maybe this moving average of 39.60, this 40, you'll see some buyers come in. And then, like you said, those fundamental theses come into play. I don't see resistance all the way back up to 48 to 50. Where was your first entry? Just so I could figure out, like a portfolio manager, like what do you do? Like how do you figure your first entry? Do you use it technically based, or is it just valuation based?
We look at the fundamentals and the growth, the end market growth, but most importantly, you look at valuations, and this one actually got to be a very attractive dividend. Right. Very rarely does this trade over a 4% dividend yield, and so we started buying it on the yield basis, which was like in the mid-30s. So, we've had a nice gain so far, but we think there's more to go.
Okay, good. So what's another name that you're looking at?
So staying on the themes that we talked about, we like the trucks. Okay. So Cummins is one that I like an awful lot. Now, they reported a disappointing quarter yesterday, but I would argue that it was up 24% into the print. So it was going to give back some. They were cautious on guidance. Everybody is cautious on the global guidance. So this is one that I think in the low 90s you want to be looking at.
And if you think about it, like you just said, they came out and they were a little disappointing in guidance. I just looked at the chart. And it closed well off the lows. So that means it opened down, people came in and they wanted to buy that dip. So technically, to me, that's a good sign also. You look at CMI right here. So it closed really strong the day before earnings. Yes. And then yesterday opened down right into support. Not bad. held this 90. So, right there it showed you that people wanted it on the dip. So I do think this is a good candidate, held above its moving averages. I think little sideways work, and then momentum traders, and what would be really good for the market is when it clears, this resistance around 98, and then it'll get, really on top of its game.
Great. Well, and so then the other one that we've been just buying, we just started buying was Weyerhaeuser. And this is a housing play story. So you're going to say, why do I want to own housing stocks? It has a very good dividend yield. Again, we bought it on the yield basis. Right. They just converted to a REIT. And again, it's I think we're troughing in housing. So maybe we don't see a material upside immediately, but we want to own it for the long term. And the valuation is very cheap.
Well, everyone says you don't want to buy a home builder, but meanwhile, the home building index just had a huge move. So don't take your likes or dislikes. Just because your place is underwater doesn't mean these stocks can't go up. Hate to talk, as adamant like that, but the bottom line is you look at this chart, WY, and you could see a nice little pattern here. Nice lower level base. Obviously, it's not showing relative strength to the market. I typically like stocks that are ready to break out, but we don't have many of those either. So as long as this holds to me above 16, I see some buyers coming in. This could get some momentum above this 1770, and then some resistance around the moving average of 19, but nothing really in the way up until about 20. So I'm looking to buy a house in the next 2 years. Let's chill out, housing market. Don't go up yet.
I don't think you have any risk of that.
Not that. It's going to be slow and steady, but I do like the refinance plan. I'm not going to get into it where they're actually going to give people who are current the lower rate. That, I think, will be a stimulus to the economy, but we don't have time for that. So if we go into the trenches, though, there are probably other opportunities that we could talk about, based on their trading, based on their results. So let's take it in the trenches with some just opportunities in earnings, and where do you see some of those?
Yeah, so we had a lot of earnings so far, a lot more to go, but one name that I really like a lot is Schlumberger. They reported last week, and it was a headline miss, a little bit soft in terms of the earnings. Revenues were fine. I think this is one of the premier oil service companies, and I do think that oil stocks actually are poised to go higher. This company is a cash generation machine. International margins were very strong. So on the pullback, we wanted to buy it, and I think that it's still buyable at this level.
Okay, well, I actually put that in off the charts last night because as a trader, Schlumberger has been one of the go-to stocks we go to besides Halliburton, besides some of the other ones. You take a quick look at SLB, you will see you have a nice little tight wedge here, right? Big move off the low. It's come up. It's going sideways. I'd like to see it stay in this range and not violate it to the downside. That would be a little faulty. But I think for us, above 70, we would get very excited. But before we continue in the trenches, what I'd like to do is just give a quick little commercial break and come back for more because we have a lot more information to unfold for you.
I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
All right, what we're going to do right now, since we just had a quick break, we're going to go back in the trenches, and we're going to talk about more opportunities in stocks that already reported their earnings. We're going to have their earnings and look at the levels. So what's the next one you're looking at?
I'm looking at Juniper. The stock actually, they had a dismal quarter, but it wasn't new news. And the guidance wasn't good, wasn't new news. But the stock actually has perked up in the last couple of days. I think the valuation is very cheap. It has $6 a share in cash.
Not bad. So take a look at this. I actually looked at it yesterday when it tried to clear their space. Nice lower level base. If you were caught in here, sorry, this is not your problem. This is your opportunity. There you go, above 22. Didn't get up and get going, but look at the move. I think as long as it holds above this 2060 area, we could probably see more momentum and see 26 to 28.
Nice. I'll take that.
There you go. What's another one you're looking
Freeport, McMoran. That one is a name that has just been kind of annihilated with copper and the metal prices. Great quarter. Fabulous management, good cash flow. I like it. We've been nibbling in the low 30s, so we like it a lot.
That's good because we looked at this when the market would reverse, and obviously this was a laggard type play, but it's starting to show a bit more relative strength. And if the global economy does come back a bit, you're going to see the metal names come back, especially with copper. So FCX had a big move. What I would watch is this. I'd like to see this earnings gap hold. I'd like to see buyers say, you know what, we're not going to let this just fall back down. That would show me a little bit of power. So as long as it holds this lower area, I think that you will see a quicker, higher move above this 40. But if all of a sudden it starts to refill this gap, then it's going to take a little bit more time because this was a big resistance area. But overall, this stock is acting better. So if you want it in your portfolio, it should be just more than a trade. I treated it only as a trade.
And you get a nice dividend yield too.
Bang for the buck. We love bang for
That's
the
what
buck
we
on
look.
this
That's
show.
what we look for. Right. So the other name I'd like to look at is DuPont. They had actually a pretty good quarter yesterday. Initially traded up, but then sold off with the rest of the market. This also has a very good dividend yield, but a very good diversified chemicals company, and they own the ag space and they own the TiO2 market. So like that one.
Okay, so we're going to take your word on for that one. The next one I want to look at with you, because I think a lot more people are looking at it, is IBM. What's your thoughts on IBM?
IBM, expectations were very high headed into the print. So, I thought the quarter was fine. Why you own IBM is for software and services. Those two divisions showed very good strength. Hardware was disappointing. Right. They just had a change in the CEO. They made an announcement yesterday. I think it's a good decision. This woman actually comes from kind of the sales side of things, and I think she's going to continue to focus on the growth markets and the growth products at the company, which should help margins and should help overall growth for the firm.
Yeah, I think this has been one of the chosen ones. It shows you that you could be a stock picker, because everyone says, oh, you can't just pick, you can't make money in this range in this big market, but you do have the stocks who make historic highs. Yeah. And IBM made historic highs going into earnings. Yeah. That's why it was a bit priced in. I'm looking at the chart. I just want you to be a bit careful short term. If you look here, you will see that it does have somewhat of a uptrend intact, and it hasn't broken. But if it were to start breaking below this 180, it could retrace a little bit more. Then I'm sure you're going to try and steal this thing at 173.39. You still have a gap from earnings. It hasn't filled it yet, so it's still in control. If it could fill more of the gap, I think it negates it. But at this point, some shorts are probably shorting it versus this peak. I think you're kind of crazy, but if you're long and you can't handle it for the longer term, it breaks 180, you could see 173.40. It probably depends on what the market's going to do after this week.
If the market rallies and people chase beta, they're going to go to Juniper. They're not going to go to IBM. So exactly. It will lag, but this is a great long-term story that you can kind of sleep at night with, I believe.
Exactly. And do you have any more in the earnings arena you want to talk about?
Well, I think that's it. I mean, we had Broadcom last night, and right. That one we're going to see how it opens. It doesn't look so good, but I still like that story an awful lot. And if it were to weaken, I still like it for the Apple play and for their wireless growth. So that's a name that is on our radar.
Well, on that, let's talk about another theme. In the quick hits, what we want to talk about is something that I think is a little concerning. It's that we're losing a lot of names in the high beta growth area. We lost Netflix, a few months back when it showed technical weakness before the news. GMCR saw weakness technically before the news. I just want to show you quickly on GMCR, because people are like, how did you see that? How did you know that? People have been saying, to short GMCR, back from 30. It didn't really show that weakness until, like I just showed you on IBM. It had an uptrend that got broken, retested, couldn't get back above it, potent down day, and then this was an ascending channel that broke to the downside again. Well before Einhorn came out and said that he was shorting it, and now look at it, it looks gross. But at this particular point, you have to watch out for other ones. Right. So some of the other names you watch is obviously Apple. Mm-hmm. Apple is one of the favorite names. We talk about it short term, long term. You name the term, we talk about Apple. But right now, you have a bit of an eye on top, nothing to get too concerned on. They had the pre-announce, not the pre-announce, but just the soft earnings, but I think they had the push out for the next quarter. So I want to just show you some levels on Apple, because I know you love it fundamentally also.
We do. And I'm, if you could tell me that they had a bunch of bad news, right? They had Steve Jobs passing away, they had the bad earnings, they didn't release the iPhone 5, and the stock's only down 5% from its all-time high. That's not so bad. I wouldn't be buying it here, but I still like it for the long term.
And do you have it in your?
We do.
Now, what tier would you say you are in Apple right now?
Well, I would say we would definitely. We're not buying until if it hit like 350, 360, because our cost basis is so much lower. But we're not selling it here. That's our the fact that we're not selling it. So it's kind of like just a steady core holding.
Okay, so then I'm going to show you guys the trade, because this is what I do every day. I trade this thing. And Apple right now, if you look at it technically, it's still being controlled by this earnings gap. Okay, this is what we call an eye on top. I thought I got a little excited yesterday. I bought a little bit thinking it could fill it, that it's all over, Apple's back on its game, but it could turn lower. So like you said, Steph, it's above the 50-day, so it's not even below the 50-day after Steve Jobs passes away, the put off for the iPhone 5, etc. So on a technical basis, you now have an inside range. Below yesterday's low, perhaps you short a little bit, and then maybe you buy versus the 50-day. But if it doesn't hold the 50-day, you might get your price at the 200. And if this is the case, we're not going to be seeing too big of a move in the market.
Well, it's very helpful to see this from a technical basis because this is a stock that's so well liked, as you said, right, and is so well owned, which is one of the reasons why we're holding it, we're not adding to it. So, but it's nice to see the levels because from a fundamental point of view, the valuation at 350, 360 is very compelling.
Okay, and I just wish what they should do: split their stock. So then people would not, because psychologically it's tough to own, a stock that's 400. I said the same thing with Google, and if you talk about Google real quick, it's definitely a great growth story, but it's so hard to hold a $600 stock. I talked Baidu split 10 for 1. Right. It's at 1,200, 1,300. It wouldn't have got there if it didn't split. Right. And Google, which had great numbers, great quarter, it's hanging out up here, and it's frustrating everyone because this was the quarter. Yeah. If you would have bought on this day, you're probably net down. Okay, obviously it had a big move off the lows, but for it to get no traction after earnings, it's a little bit of a concern. So I would trade it if you're trading it long on a short-term basis. Trade it versus 577. If it breaks 577, it's going to fill this gap down to that 561. So just be a bit careful here. This day yesterday was a little upsetting for me.
And to your point of high multiple growth stocks, I think there's so many stocks in the market that are really low multiple, really cheap, really undervalued, and low expectations. And I think that's where your opportunity is versus chasing some of these higher multiple names. Right. There are certainly pockets of names that you can own, but I just think, as I say, we go back to the industrials. I mean, they're trading at 8, 9 times earnings, not 45 times earnings. So
does that mean I have to start trading GE instead of trading Apple, Baidu?
Not GE. No.
Not GE. Okay.
No, you could do Eaton. You could do Eaton.
Well, what's interesting is that as a trader, you always have to change up your go-to list. And you can't be blind when stocks start to lose momentum. You can't say, I love trading this one. You know what? If it's not trading well, maybe you'll love trading something else that's trading better. So as a portfolio manager, you have to look at the next sector. You have to rotate around, I'm sure, add cash flow to all your positions back and forth. And as a trader, you do the same thing. And that's why on the price point sheet, stocks change. And if you don't change, I remember back in 2001, 2002, everyone traded the semis. Yes. Everyone traded Clack, Novellus, this and that. And then in 2004, you were stuck making pennies trading Clack. Anyway, the semis came back in vogue because maybe they were looking for value with Intel, the mega cap names like you just said, low PEs, dividend, bang for the buck. So just keep rotating around and keep changing. And I'm sure as a portfolio manager, that's everything you have to do and look at every day.
We look at all of the sectors that the S&P has, and we actually every day look at our relative weightings, where we are positioned. Are we overweight, underweight, each sector, every single day.
A lot of work to do, and I wish I could talk to Stephanie probably for a few hours, but unfortunately we have to send this over so you guys can look at it if you're not watching it live. So at this point, big move in the market. We're going to watch retracement levels, keep rotating through your different sectors. Look more at the market action versus the headlines, because those headlines, they tend to get uglier and uglier, and they're not going to go away quickly, but it doesn't mean you can't watch the market for opportunity, because if you're watching the show, you're probably learning, you're getting ahead. And you can use the market to your advantage and make money.
Absolutely you can. And the stocks are still cheap.
There you go. You just have to make the actual move to do so and have your eyes open, not closed. Scott Redler, T3 Live, the morning call with Stephanie Link.
Thanks so much for having me. It's great.
My pleasure.